All right, good afternoon, traders. This is Christian from Tribeca Trade Group, and it is Tuesday, November 12th. And I don't know, it kind of feels like a Wednesday already. I don't know why, but so here we are again. Another candle that you could look at in the S&P chart that you can jump to conclusions. I've seen people do that over the last few weeks. Oh, this is the reversal bar. I continue to kind of say the same things. I know I probably sound like a broken record, but watch the 5-period exponential moving average, which I've got on my chart. As long as the price stays above here, I'm not really making too many adjustments here other than trying to take profits every day. Trying to maybe put on a couple of trades that look interesting, but continue to try to be a net seller as we are looking maybe a little bit exhausted up here. I thought what was interesting is market breadth kind of flipped on the day. Let me just bring up that screen. I thought I had it up here in Bloomberg, but I don't. But I tweeted this out earlier, and this was about 11 o'clock. This was an hour before Trump spoke. And the advancers were outweighing the decliners, both in the S&P and the Nasdaq, about 2-1. You could see they flipped around here, so maybe there was a little bit of profit taking today in some names. I think also what happens when, just very logically speaking, this is not going out on a limb here, but before a president speaks and you don't really know what it's going to be about, and the market is super strong. What we normally see is, people just are being realistic, right? They're like, hey, I don't know what he's going to say. I don't know what he's going to say about China. We don't really know the subject of his speech. So I think we did see some profit taking, and then Kudlow was on afterwards. So I know I'm giving a little bit of an excuse here, but it is what it is. Market breadth did deteriorate over the day. Is this horrible to the downside? No, but probably why you see this kind of doji looking candle for the day, because we did try to reach higher. We hit 3,100. And again, I think more people are waiting for, hey, this thing's going to move down. I still continue to say the same thing. I think we are a bit extended up here. I would not be surprised if we come down here. Again, I've said that for 3 or 4 days. So, we can't control this. We don't have a crystal ball. The only thing that we could really do is kind of manage our own, manage what's on our plate, manage our risk, and kind of go from there. But overall, I think a nice day. We had some really nice trades that went up today. I went long this SE for earnings. This did pretty well. Was up 18%. So finally, after all that call activity, it's down a little bit here the after hours. They already announced some type of a secondary deal. I think senior notes. But this is how I played it. I, of course, whenever I go long and I'm outright calls, which I was for SE, I do hedge a little bit pre-market when a name gaps up like it did in the morning, and then I can take my time with taking targets. So you could see these were the November 32 calls that I took off for. What is that? That's more than a triple. So this worked out pretty well. And the last target, right? I did take some off for 390 as well. So nice little trade there in SE. Again, nice to see that one work. Keep in mind, I know there's going to be the camp that's going to brag about this trade. I talked about this in our option activity webinar about a week ago. Yes, this did work, especially kind of if you avoided this thing like a plague and maybe just went long on earnings. But the thing is, right, this thing is not, from where we saw all the option activity, probably all through here. Again, all depending on how you handled this trade, if you went long like I did for earnings. Now, I had a trade in here, which I basically gave up on, and I held it, did a little bit of management here, but I took it off before earnings and then just put a new trade. I was long, I think, January 33 calls. But keep in mind, the thing to think about this, right, is in the whole realm of things. Again, I'm very objective with this stuff, but if you would have put on S&P calls, just going long the outright SPX, SPY, what have you, you would have done a hell of a lot better than going long SE, even with this earnings bump. And even if you added it a little bit at the end of the day, you still would have done better. So I don't want to hear, like, I know people want to raise, oh, they knew, say they got it. Well, yeah, they did, but you would have done better if you would have invested your money other and probably in almost any other name than SE. So let's just face it, it is what it is. But this is not. If you would have went long back here, even at up here, this was a much bigger move from here to this peak. And even if you added in here, then going long, SE in here, just to kind of put these things in. For again, from where they started buying calls, which I think was all the way back here, and they did a lot of adding and so forth. But that's a lot of time value to lose on your calls. If you were in October calls, you lost. If you were in some November, you probably did okay. But again, these are things to think about rather than seeing people do victory laps. Time value of money, you would have lost money for 2 months before having a little bit of a payday today. So just keep that in mind. And again, you could use the flow in different ways. Like if you didn't take it because you didn't like the chart and you thought it was a good trade to put on for earnings, then you really did well kind of playing the game. All right, so some other trades that we did today, or we did yesterday. Chipotle was a nice trade. So I took this trade. This was a limited risk reversal that I talked about, and I believe I talked about this in yesterday's video. Again, I always try to break down these trades, but I took off the calls right in the beginning of the day because nice value in there. You could always keep one if you ever have a winner like this, right, where you paid $5 and you see the price of the option go up to $12. The best thing that I think to do, and again, I'm not giving out any advice or recommendations. This video is for information purposes only, but you could take that trade off, and if you think it's going to run more, you lock in your gains and you do what's calling rolling out and up, right? Or just up in strike, meaning you still can have exposure to the name in Chipotle, but you lock in a decent portion of your trade. So I did this, right? Next trade, I rolled into the CMG, into the call, and I actually made it into a call spread. So I went a little bit higher. So that's called rolling up. Not out because I did the same maturity, but I did the 767.5, 775 at 288, and this name actually did not go up from this morning. So I think I did the right thing with taking all that money off the table. I tried Etsy today. I was able to hit one target and the thing kind of fell apart. Again, I like to go over the losers too. I know nobody has them on Twitter, but I do. But I like to go over them. Here's your false candle, right? And maybe waiting for extra confirmation to see if this would actually turn the corner, get above this 50 period moving average, which it did not do. I think this is where I took my first target. And again, that's why you take targets. A lot of times you could just, if you really still like the trade, you could go ahead and add it back. Microsoft, which I also did the same thing, took targets in this one. December 145 calls that I put on Friday looking for that breakout, and it looks like we got it. So took profits above $4, and I got in at 285 for Microsoft. So I still think if we look at the chart, it's now moving outside really nicely out of this consolidation, out of this bull flag. So what I did, again, same thing. I should have it in here someplace, but I did roll a little bit out. Maybe I didn't put it on here in the notes tab here in Slack, but what did I do here? I think I stood with the same maturity. And I'm in the January 150 call. So I'm in the January 150 call. Again, I was in the 145. So again, doing the same thing. I was in December 145, which I think is short term, right? Because you have the most amount of theta decay once you get into front month, which in less than a week, November call options will be gone, monthlies. It'll now be December. So I don't want those options that are going to have the biggest theta decay, time decay. So I went out to January. KHC, I put out a video on this. We also had a target in TMO. Target, again, this is why I rolled Sony yesterday. Sony. I was in the December 62, and I rolled the last piece. into the January 62.5 calls, and now the roll. I was able to take target on that one. Abbott, nice winner as well today. Some of these names kind of gave back. I'll show you a trade here in just a second, but yeah, I think Abbott looks fine. Didn't close on the perfect highs. But I will show you why these things were going nuts in the beginning of the day in just a second. Let me just get through the rest of the blotter. KHC, new trade. I like this. And what's funny is we actually saw. So I was crying yesterday because I dumped BSX calls. Right, we saw some calls go up, short dated. I decided to dump them. It wasn't doing the right thing, and today it took off. That's just sometimes how it works. Listen, I'm okay with all of that. I didn't like how it closed in value, but look at this bar. So I actually jumped back into the name, right? Sometimes you could do this. It made this nice move from the open, came all the way back in, and we saw a whole bunch of calls go up right on this candle. So I jumped back into the name, and I was actually able. I had to leave early today. I did a quick CNBC video, which I'll put out on Twitter a little bit later, but for their Trading Nation. But I'm a little bit messy here with. But I was able to actually hit. Oh, here it is. Here's one target in Abbott, and then no, not Abbott. BSX. So I think I actually hit a target at 95 cents in this one. Skyworks. I did a small call spread in this just because of what Corvo did. I think this name is down. I think their numbers were fine, but they just it's a case of a name running into earnings a bit, right? Way overbought into earnings. So maybe watch for a dip in this thing. Maybe down, I think it's going to be somewhere around here is where it's trading. Notice that right back to the virgin point of control. What else did I do in our tactical portfolio, which is a cash portfolio? I decided to take a decent portion of MRVL off. Now, again, I have a runner on, but rules are rules. My whole target the whole time from where we put this trade on, which was right in here, was to get to the VPOC. Well, it got to the VPOC. All right. I did not go over, like I said, I have a video on craft, so I won't go over that trade. Let me show you the XLV, and I do have a video on XLV. But if you look at the option, not the option, the cash volume, right? Some people only look at options. I think it's important to look at what goes on in the cash market too. Buying is buying. I know some people may argue with me on that, but actually, let's increase this to 150,000 shares. Take a look at these blocks that were bought in the beginning of the day. So this is why healthcare and biotech names were going nuts today, or at least part of the reason. But this was up to 1140, about 1147 today. This was a 1.3 million share block. This was a almost 900,000 share block. So some nice buying going on here. And again, I think sometimes people are a little bit fooled by the name of the ETF that says healthcare. You've got names like Abbott, TMO in here, and you've got biotech in XLV. It's basically the whole group, not just like pharma names, which I think people think. And if you look at the components, right, J&J and names like Merck are on the top, but United Healthcare also, which has been going nuts. But yeah, you got Abbott in here. You got a lot of medical devices in here. AbbVie, which has been doing really well. These are names that I want to basically own. So I have a video on that for CNBC, which I'll send out later. But I think that was interesting. Also, another one that you're not going to hear too many people talk about is the Australia ETF. A lot of volume in this one. It traded 8 times normal volume. So I'll have to check because it's a little bit difficult to see if somebody is buying or selling the way that these prints went up after hours. But 6.2 million shares. And maybe at the fund's NAV. So I don't know. They might be doing some type of like a financing transaction, but these went up right after the close. So notice where the close is 8644. So it kind of looks like an NAV trade, but nevertheless, really large trade. But sometimes it's just like option activity. It kind of gives you an idea to take a look at something. Look at the 5-year chart of the Australia ETF. Kind of looks like a nice inverted head and shoulders going on right when it's about ready to break out. So I think this is interesting in the Australia ETF. All right, so what else do we see today? If you look at, I mentioned that in the beginning of the video that market breadth trailed off throughout the day. Q's finished up just 30 basis points. TLT actually outperformed. Gold reversed and went a little bit higher, just fractionally higher on the day, but gold has been getting hammered. The same thing with bonds. So, slight reversals there, and the same thing with the overall market and decliners leading advancers, which again was much different. Midday best performing group. I've already talked about healthcare, gold miners, and then you could see. I think a lot of. I looked in the beginning of the day, and a couple of these energy names were green, so they flipped pretty decently. So maybe that's part of the reason for that breadth divergence. Interesting with these FANG stocks today, it was Facebook that went nuts. There was some call action in this one. Remember that we saw call activity, some big blocks going out to February. This was about, I want to say, 2 to 3 weeks. It is still not triggered a buy signal for me. It's not. It's right at the top of value. I need to see it get above, say, 195 for confirmation purposes, and then you have a virgin point of control up here at 202. All right, guys. So I will leave it there. We'll keep the video under 20 minutes. Again, one of those things where we're continuing to grind higher. Maybe we're starting to lose a little bit momentum. Again, the best thing that you can control is your risk, and make sure that you kind of don't get caught. If you think that we are going to come in a little bit, make sure that you're forcing even some trades. You have to force some trades off your books a little bit. All right, guys. Have a great night. See you tomorrow.